Hello guys, welcome to the session today. So I'm just loading this list of attendees so I can see you guys. Hi. So let me just put the disclaimers up whilst people are still coming into the room. There they are, top left hand corner, so please read them. Obviously if you're watching the recording, if you need to pause the video to read them, by all means do that. Always got to make sure we get the disclaimers done. Now, today we are looking at Forex, but we'll also look at a few cryptos as well, if you guys want me to. As always, I will say in the chat box, this is your session. For those that are watching live, you're here with me. If you want me to look at particular currencies, at particular timeframes, you let me know, and I will allow you to guide me in that way. Otherwise, we'll use scans and things like that, and we'll look at opportunities as they come. So first things first, let me just let you know where you can go if you have any questions. You've got Becky@tradictive.com, which is there. There's also support@tradictive.com, so you can email us if you have questions. And there's also a place you can go, which is tradewithufos.com/Becky. And from here, you can get different apps and platforms, book one-on-one coaching. But if you scroll down, you'll notice there's a frequently asked questions section where you might find answers to your questions in here. If you don't find them, you can log in for free and ask it there yourself. Okay, so first things first, I want to look at some trades that we placed last time, actually ages ago. It was 5th of January, I think, maybe 19th of January it was, that we last did this, or we last looked at some new trades. So we'll have a look at what happened, not just to see the results, but to see how we might manage our trades, which should help for you guys to take that onto new trades. So with this first one here, we had a US dollar versus the Canadian dollar. And what we saw is that we entered into the trade at this point. So we entered into the trade on the 19th of January. Now, one potential issue here, don't know why my arrows aren't working. That's strange. Okay, I'm gonna have to use my pointer. So we entered into the trade at this point in time, which actually at this point in time, if we see here, our auto climate was thin, which actually means if you've been paying attention to the markets, then you would have cancelled the trade. Now, if you didn't pay attention to the markets, let's assume you just left this and you had your targets and stops wherever they were, and you just left it, then what would have happened is you would have hit your first target, then been stopped out for the second half of the trade, overall being a break-even trade. So whether you left this or you didn't, it actually ended up being a net zero trade, right? You either cancelled it and you weren't in it in the first place, or you took half the trade as profit, took half the trade as a loss, and it was a break-even. So that's what happened in that one. Now, like I said, in terms of trade management, we should have cancelled that trade because the parameters as to why we got in it would have been different anyway, would have not been lined up. So we then had the Swiss yens, that was a daily chart and a 55-minute chart. For those that are coming into the room now, again, just to remind you guys, for new trading opportunities, you guys let me know what you need and what you want me to look at, and I will always prioritize that. Okay, so with this particular trade, we placed it on the 19th. We entered here on the 20th, so we would have got into that trade then. We hit our first target at this point, which was the next day. We got close to the second target, but not quite. We ended up getting out of the trade at this point on the 2nd of February, there we are, because the climate would have changed. So if we'd been actively managing that trade, we would have taken 50% profit and then call it 40% profit. So overall, a small profit on this trade. If you had left it and you hadn't have done any trade management at all, you'd still be in the trade roughly hovering at break even for the second half. So you'd still would have been in a slight amount of profit, but should be getting out of that trade because we now have the climate against us. For those that don't know how we trade and don't know what climate means, don't worry, we will get onto it. So for those that do know what it means, hopefully it makes sense as to why you'd cancel the trade. But like I said, even if you hadn't done anything, you'd still be at a slight profit. If you did cancel the trade when you were meant to, you'd have taken a bigger profit. So the Euro Swiss was the next one that we placed. This one would have been an out-and-out cancellation. Reason for that is we placed it on the 19th of January at this point because we had a thick red dot and our EMA was in the right place. By the time it triggered, which was this point, we had the thick red dot, but we no longer had the EMA in our favor. So we would have cancelled this trade. If you'd have left it, this trade would have been a loser for you. If you'd have managed it, you would have cancelled the trade, never even got into it. That's why trade management is really important. Yes, we can place set and forget trades, and there's nothing wrong with that. I personally quite like set and forget trades. But if we're not actively managing these trades and cancelling them, if the reasons we got into them in the first place are no longer lining up, then we can leave ourselves open to losses that's unnecessary. So with this trade here, this was a long trade, and as we can see, price entered us here, moved up a little bit, ultimately moved against us. This was an out and out loss for this trade. And then we have Litecoin, which was a trade we placed last time. Now, we were on the right side of this in that we went short. Now, I'm not sure if you guys follow cryptos, but most of them have been falling. They've had a recent move to the upside, but most of them have been falling consistently for weeks. And we happen to get in on that reasonably early on, which is great. So with this particular trade, if we just squidge back a little bit, we would have got in around about the 20th of January or 19th of January, it looks, 20th of January, everything lined up, we would have been in the trade. It hit our first target very quickly, so we were at a break even by that point. Continued down, hasn't quite hit our second target. If we'd have been actively managing the trade, we would have cancelled it around this point. So as a ratio, that might be an 8 to 1-ish. So you would have taken half the trade, and then you would have taken an 8 to 1 on the other half of the trade. So overall, very decent profit out of this short on Litecoin. If you'd have left it and you're still in it, you are still at a slight profit. Again, I would suggest that we'd be cancelling it right now. Climate is against us. We'd still be taking maybe a 5 to 1 out of this half of the trade. So still profitable. Whether you'd managed it earlier or whether you're just looking at it now would depend on how much profit you made, but overall profitable trade. So I know for those that maybe haven't been part of the sessions to see us place these trades in the first place, that can be a bit boring, but hopefully what it does is give you context as to trade management, showing you the importance of trade management and why it is that we cancel trades. So moving forwards to look at some new opportunities, I want to first look at FX Street's economic calendar for us to just be aware of which currencies we might want to either avoid or we might want to just be careful of in terms of doubling up. So I've filtered by high impact news on most major currencies because we want to know which scheduled news reports could be having an impact on these markets and increasing volatility, which can increase risk. So for example, we've got the Australian dollar. I think we're in GMT here. Yeah, we are. So in GMT, Greenwich Mean Time, Australian dollar news coming out early hours tomorrow morning. So perhaps we don't want to place too many trades on the Australian dollar. Friday, we have some middle of the day news coming out that could affect the Canadian dollar. And then coming on Monday, a few for the euro and the pound. Later on in the week, obviously other currencies, but we want to be more focused on what's happening shortly. So it's not that we'll avoid the Aussie dollar entirely, but I'd rather not put more than one trade on for it because the more Aussie dollar trades we put on, this news then comes out in the middle of the night for me, and that could affect many of our trades negatively. Could affect them positively, but we don't know. So I'm going to come to our scans here to help us drill down on which currencies we're going to look at, unless you guys have other suggestions, in which case I'll follow you. Now, I prefer to look at swing trading type time frames. I'd rather not be looking at really small time frames with Forex. Not because it's not a good way of trading. Lots of people can make that work. For me personally and my experience, and I've been trading now for 8.5 years, 2013, so whatever that is, 9.5 years. I've been trading for a long time. And from my experience, the higher the time frames I've gone on Forex markets, the better it's been for me. That's not to say that's everybody's experience. What I'm saying is I will start with the bigger time frames and then we'll drill down from there. So we're spending more time on these bigger time frames. So where we have daily climates, this is where we'll start. So our bigger time frame being on a daily chart. And we've got a few different opportunities to look at. We want to look at the ones that have these yellow boxes that say near sensible, long or short, doesn't matter. So we'll look at the yellow boxes that say near sensible. And then the secondary thing we look at is we want to make sure that we're looking at an opportunity that has either a red or a blue box, not a grey one. So for example, on this side of the chart, we have these three to look at. On this side of the chart, we have these 6 or 7 to look at. We'll start with the dollar pairs. So the New Zealand US dollar. What I'm then going to do is go and load these on TradingView, because I know a lot of you guys use TradingView, so it'll be easier to have a look at. So New Zealand dollar versus the US dollar, that's what we'll look at. And we'll look at our different opportunities, what we could be placing. By the way, I'm using Oanda data. So if you're trading with other platforms, other brokers, of course, you might see slightly different data to me, but I want to be consistent. The Oanda data is going to be very similar to the TradeStation data. We're using TradeStation for the scans, so I want to use Oanda for the actual opportunity. Okay, so this first trade I will explain bit by bit, so those that are newer or those that are watching this recording might understand what we're doing. From there, I'll go much quicker through our opportunities and just quickly saying yes or no, would we take that trade, and getting the numbers right. Okay, so first things first. We have a thick red dot on our AutoClimate. AutoClimate is free on TradingView, by the way. You can get that from that link, which is tradewithufos.com/Becky, and get it downloaded for free. So what AutoClimate is doing is basically telling us where the probabilities lie. If it's a thick red dot, probabilities are down. That means we want to look to short. If it's a thick blue dot, like one of these, that tells us probabilities up, and we'd look to go long. If it's a thin dot, like one of those or one of those, of either color, that tells us don't do anything. So first things first, we want to be looking to go shorts, because that's what the climate is telling us. Second thing is, where do we go short from? We have different things going on the right hand side. We tend to, if the bigger time frame is telling us to go long or short, we want to actually get in on that trade on a smaller time frame so we can be tighter on our risk. So in this case, we're using a 55-minute. But we can actually cycle through timeframes, and we will, to see if we can find an opportunity. So I will look at the 55, the 60, the 120, and the 240. What we're looking for on the right-hand side is a red UFO. Red UFOs show us where sellers are. So we've got probability down, we want to go short, we want to sell with lots of sellers, so we use Auto UFOs to show us where they are. So we're going to sell with sellers if we can find them in the right place. What do I mean by the right place? It's going to be where our EMA number is from the bigger time frame. Why? Because people buy and sell at the EMA. If price is below the EMA and comes up, which is what would happen in this situation, we're more likely to have sellers come in at that price. So what we want is sellers and sellers in the same place in the context of probability down. It's lining up things into our favor. So for the time being, the EMA is at 6642, which is here, right? Very close actually to this green UFO. So it's not lining up with the red one. So what I'm going to do is just swap a time frame, see if that changes something, and lo and behold, it has. So on the 60-minute, we now have a trade that's lining up. We have a thick red dot on our one-day chart, probability down. We've got sellers very close to us that are enveloping the EMA price. So we've got sellers with sellers in the context of selling. So we will place this trade. This will be the first one that we place. So I'm just going to use these fib retracements. I'm sorry for those that use it as trading tools. I use them as drawing tools, and we're going to put in where the numbers will be. So you see these red numbers on the side? They are 0.6653 to 0.6641. Just rounding down there to the closest pip. Those are the numbers we're going to use as reference. As we're selling, our entry price is just going to be 0.6641. Our stop loss price will be 0.6653 plus a couple of pips to take in account the spread, plus 5 pips of wiggle room. So that takes us to 0.6660. Our final target, where we hope to get out if we're right, is going to be down here at this bigger UFO. Why? Because if we've got sellers currently giving probability to the downside at the moment, the only thing that can stop sellers is buyers, and this is where there's a lot of buyers. So at the moment, this is where it's showing us the closest stack of buyers are. So that's what we'll use. So that price is going to be 0.6492. I've rounded that up and added a couple of pips. Our second target, or our first target, I should say, is going to be 1 to 108. We'll figure that out in a second. So entry 0.6641, stop loss 0.6660. Oh, 666. If you're superstitious, maybe don't place this trade. The first target is always going to be 1 to 108. So if the risk is 19 pips, then the second target is 19 pips away. So this is going to be at 0.6622. That's our first target. So that's all the information we need. We've got our entry, stop, and 2 targets. I risk $100 per trade, so $50 on each target. Just as an example, you guys will risk whatever you want to do. Obviously with Forex and the leverage, it helps us to be quite tight actually on our risk a lot of the time. So you guys risk whatever you want. For me, this is an example. So that's the first trade. Let's put in a little note just so I remember what we do for next time. I would suggest this to you guys as well. Write notes on your charts if you can, because it's much easier. That's why I draw things on the charts rather than just put the numbers in. Much easier to figure out what you've done when you come back next time. Okay, so just, it wasn't 55 minute actually, it was 60 minute, wasn't it? Here we go. Okay, so first trade put on. Let's now go back to TradeStation and see where we might have a different opportunity. So we've gone short the New Zealand US dollar, but interestingly, the Aussie dollar versus the US dollar has probability upwards for the time being. So let's go and have a look at that. I'm happy to place that because it's kind of a inversely correlated trade. So hopefully if we're wrong on one, be right on the other. Obviously it doesn't always work out that way, but it's an interesting setup. Okay, so when I come back to the 55 minute, we'll start there and then we'll go to different time frames if we need to. Okay, just looking at this quickly, we don't have a trade on this time frame. Very quickly explain why. Because the EMA number 71435 is exactly where this UFO finishes. So it's, if price were to move down any further, the EMA and the UFO wouldn't line up anymore. So I'm going to look at a different time frame, see if we've got a little bit more room, and we do. So let's take again here on the 60-minute time frame. We've got another trade in front of us. Let's place it. I hope to be able to get through quite a few trades today if we can. So we're taking these little sort of olive green golden numbers there. So it's 0.7164 because we're going to round that to 0.7162, round it up, and then add a couple of pips. The stop loss is going to be taking this number, which is 0.71418, round it down to 0.7141, and take off 5 pips for wiggle room. Oh, I did that the complete wrong way, sorry. So that's 0.7164 and 0.7136 it was. There we go. Brilliant. Okay, our final target is going to be where we have sellers. In this case, we're buying, so we want to get out where there are sellers. When we're selling, we want to get out where there are buyers. So again, I'm just taking this number here and using that for reference. So that's our second target, and our first target will work out in a second. For those of you that are watching live, you let me know if this is going too slow because you already know how this all works. Let me know. If this is going too fast because you don't already know how this all works. Let me know. And if you have any particular trades that you want me to look at or analyze, again, let me know. The more you guys let me know how things are going in the chat box, the better these sessions are, because I can tailor it towards what you need. So this is our first target, which is 0.7192. It's gone in there. And our second target is going to be where we figured it out to be before. Same stop loss, same entry, same risk, but the profit target will be different at 7273. So far so good. We've placed in 20 minutes, we've explained things, we've introduced, we've opened up, whatever, and we have placed 2 trades. So that's pretty good. I'm happy with it. Of course, we have just entered into this trade because it's pretty much at that entry price. So that's pretty cool as well. So let's have a look at the pound US dollar. I would suggest normally, depending on how many trades you take, you don't want to be trading the dollar every time, right? Because let's say something happens in the States, or I don't know, Biden says something or whatever, you've got movement on the US dollar that can then affect multiple different trades. And if you're in multiple different trades, all correlated with the US dollar, you could end up losing all of them because of volatility just with the dollar. So ideally, you look at some cross pairs as well that have nothing to do with the dollar, nothing to do with each other. So you're a little bit hedged. Saying that though, let's look at the pound US dollar, because some of you might not have taken those other trades. Let's look at the opportunity that we have there available. By the way, if the host could just let me know, I can't remember if we finish at 45 minutes past or at 3 o'clock. So let me know so I know when to shut up. So just let me know in the chat there, and I can go from there. Okay, let's come back to the 55-minute here, analyze where we might have opportunity. So at the moment, the EMA price is 1.3543, which is just underneath current price, nowhere near a green UFO on this time frame. So I'm going to go through time frames and see if we have a green UFO close by. If we don't, we'll move on to a different opportunity. Okay, I've now looked through 4 time frames that are between 55 minutes and 4 hour. None of them are showing me a setup, so I'm going to move on to a different opportunity and go from there. Okay, so now let's move on and look at our cross pairs. Same time frames, we'll look at our cross pairs. I'm going to avoid this one, which is the US dollar versus the Singaporean dollar. A couple of reasons. Not as liquid as the others, not as commonly traded as the others, so it's unlikely to fit into your guys' watch lists. And it's also another dollar pair. So we're going to move on instead to the Aussie Swiss, and we'll take a look at that. How's it going, guys? Let me know in the chat box how we're doing. If we're the trade session. If we're too fast, too slow, I'll use a different platform for that one so we don't have doubled up trades. Let me know how it's going, and if you need me to speed up, slow down, look at different things, whatever. Okay, so Australian dollar, Swiss franc, we have thick blue dot, probability up, EMA price at 6,599. So that's just here. At the moment we're on a 4 hour on this time frame, so let's have a look at the 120 and see if we do have a UFO on this time frame. Let's just see on the other ones if we have maybe a slightly bigger area. I'd rather take a bigger area if we can. We do here on the 1 hour. We don't on the 55. So let's use the 1 hour again. Okay, so just one thing here. You might be thinking, oh, why do you want a bigger space? To me, being right or not losing is more important than the risk to reward for me personally. So the tighter the risk, yeah, the greater reward to risk you get as a ratio, right? If my target is here in either case, and I'm making it up, if my target is here in either case, well, if my zone is this big, then I get a bigger reward to risk ratio than if my zone is this big. But if by having my zone here, this trade is more likely to be stopped out than this one. So I'd rather take a 2-to-1 and be more likely to get it than wait for a 3-to-1 but be more likely to lose, if that makes sense. And that's just my personal preference between those ratios. You might invert that. So let's see, based on the numbers, if this will work. Yeah, it should work. So we want to make sure we have enough room to take this to the upside. So I was just checking to see the ratio there. We want to make sure that this red UFO is always going to be at least 1-to-1 away, which it is. So that's fine. So that's going to be our target. Our entry will be 0.66. Where are we? 2-1. Our stop loss looks like we've been entered into one of those trades, which is cool. 0.6583 will be the stop loss. Brilliant. So let's place this trade. 0.6621, 0.666583. Again, I do $50 risk. You guys do what you want. Risk $1, risk $1,000, risk whatever you want. It's going to be relative to your trading accounts, which is relative to obviously the size that you have in the account, your risk tolerance, how much you risk as a percentage, other trades you've got on, all those kind of things. That's going to be up to you guys to figure out. For me, I do 50 and 50 just because it's a nice, easy round number. Okay. So that's the third trade of the day put in. Ultimately, if we were right with this trade, we are unlikely to make very much, probably average at about 1.5 to 1. But again, I'd rather take a 1.5 to 1 and be profitable than hold out for a 4 to 1 and lose more often, just psychologically. So place 16th Feb, we used 1 day, 1 hour. Just realized I don't think I did that on my New Zealand dollar trade. I did. That's fine. We're good. Did I do it on the Aussie dollar trade? I did not. Let me put a little note there for myself there. So placed 16th Feb, 1 day. I believe this one was a 4 hour, but I'm just going to say check that. Okay, let's come back to TradeStation and see if we have new opportunities. Okay, so we've exhausted what we have in terms of dollar pairs. We've just looked at the dollar Swiss. Let's go to the Canadian Swiss, see what we have there. So Canadian Swiss, Canadian Swiss. Okay, it looks like we have a trade here on the 1 hour. We'd have to group these two together. Let's see if we have anything better on other time frames. Nothing there. Nothing there. Nothing there. So 1 hour again. That seems to be the theme of today. So we're putting this trade on because tick blue dot, probability upwards. We have buyers actually grouped together here that encompass the EMA. So 0.7275 is just in here, just within this, nicely snug. As price moves down, if price moves down, then the EMA moves down, but it's still within the buyers. So we've got buyers and buyers in the context of buyers, and we have quite a lot of room to take this to the upside as well, which is also happy days. Okay, so the entry will be the top of the top UFO, which is 0.728. Thanks, TradeStation, for letting me know that you started there. So 7281 it will be, taking that top number, rounding it up, and then adding a couple of pips for the spread. The stop loss will be the bottom number of the bottom UFO, which is 0.7263, just rounding that down. Then I'm going to take off 5 pips for a bit of wiggle room, which takes us to 7258. Final target will be up here at 0.7606, and our first target will be 1 to 1 away. So let's place this one. 0.7281 to 0.7258. Again, $50 risk for me. For you, it's whatever you want it to be. First target, 23 pips away, because the risk is 23 pips. So if we want to do a 1 to 1, oh, look at that. I drew it exactly where it should be. Brilliant. There we go. If we want to do 1 to 1, then the first target's profit will always be the same amount as the risk that we have in terms of pips. Now, the second target is always as far as we can take it, which is where it shows us here. In this case, that's 0.7606. So just to show you, our second target is a 14 to 1 away. So for every $1 we risk, we make 14 if it is to go up there. Now, we obviously are taking half of the trade off at 1 to 1. So actually what that means is if we're right and it goes all the way up here, which would be great, then half the trade's taken at 1 to 1, half the trade's taken at 14 to 1. So it actually averages out at a profit in between those two things. So it would be I guess a 7 to 1 or a 6.5 to 1, or however that you work that out mathematically. If you were to not have your safety target, and you just had your target up here at 14 to 1, great. That means if it did get up there, you'd make a greater profit than if you took some profits along the way. But you're much less likely to reach it. We put our safety target in so that if price goes a little bit in our favor and then goes against us, we break even. Worst that happens is we don't win anything, we don't lose anything, we break even. If it goes all the way in our favor, then okay, it reduces our profit a little bit. But we've stopped ourselves from losing. Essentially, we've reduced the probability of losing. We could still lose. We know that happens. But that's why we do it that way. Again, as with all trading and all of these rules, you guys might look at this and go, I wouldn't do it that way. And great, don't then. It's ideally, just going to use a different platform here. I know I wanted to use Oanda, but I wanted to give it where the trades we've put on before. I don't want to confuse it, so we'll look at FXCM here. Yeah, just going back to the point there, you might just use the auto climate and auto UFOs and go, do you know what, I'm not going to be as strict to say it also has to coincide with the EMA. Great. That means you'd place more trades. You'd have more opportunity to place trades, but more than likely your probability rate would go down, as in the amount of trades that you're right on. Because the reason we add this in is to increase probabilities. It decreases opportunities in terms of the amount of trades that fit the rules, but it increases probabilities. But you might say, as long as I'm profitable, I'd rather have more opportunities. Even if my probability rate goes down a bit, as long as I'm still profitable, that's fine. You might go the other way and say, I want to add more layers onto this to increase my probabilities and have less trades, but more likely to win. You might put targets in different places. That's all fine. When we do these things, we're guiding based on what we do, based on the way we think. You're going to think differently. You're your own traders, you're your own people. Ultimately, as long as you are consistent in the way you apply yourself to the markets and you don't chop and change every time somebody says something new, that's what's most important. So on this one, I'm going to go for the hourly because it gives us a slightly bigger range there. So coming back to my point I said before, I want to be more likely to be right rather than increase my ratio. As you see here, there are no red UFOs on our daily chart of the Canadian dollar versus the Japanese yen. So we will have a trailing stop for our second target because we've got nowhere objectively that we can place that target. So what that means is, let's say, let me draw the lines around it first. So let's say our entry is going to be 90.99. Our stop loss is going to be 90.59. Let's say price comes in, moves away. We'll have our first target. We'll put that in there. Moves away, and on the way, a new UFO is formed. Then what we do is we move our stop loss from here and we put it here, locking in profits as price goes in our favor. If price doesn't go in our favor and it just goes straight against us, then we lose. Fine. But if it goes in our favor without a defined second target, which doesn't exist in this particular trade because we have no data to tell us where to put it, then we want to lock in profits as we go and trail our stops. So that's what we're doing there. Okay, so the first target for this trade, so 90.99 to 90.59, $50 risk. The first target will be 40 pips away, which is at 91.39. 91.39, there we go. The second target, as I said, because we've got nowhere to put it, we will simply put in the same entry, 90.99, same stop loss, 90.59, and we just won't put the profit target in. We just won't tick that. Same dollar risk, and we'll put that in. Again, if we're right on this and price moves in our favor, we will trail our stop loss along. So let's put a little note. So placed 16th Feb, 1 day, 1 hour trailing T2. Great. I think we're doing a pretty good job today. We're getting through quite a few markets, putting on quite a few different trades. Let's have a look at the next one. So that was Canadian yen. The next one is Euro yen. Then we'll have pound New Zealand. Then we're out of opportunities on that time frame. But let's look at Euro yen. So again, if somebody from FX Street or the host can just confirm to me if we finish at 3 o'clock or if we finish at 2:45. I don't want to keep on going on if I'm not expected to. Equally, I don't want to cut it short if I'm not expected to. So just confirm that to me. Okay, 45, brilliant, thank you. So that gives us 7 minutes to put on as many trades as we can in that time. Thank you. Alrighty, let's have a look here. Now, before we start, I just want to make a point on this one before we find an opportunity here. I'd be extra happy to place this trade because we've got a thick blue dot, probability is up. The EMA is a few pips away, and we are already within a green UFO on the bigger time frame. So if we were to also find, let's say, a green UFO around here, then we'd have buyers with buyers and more buyers in the context of buyers. So I'd be extra happy to place this trade if we find a UFO on the right time frame. At the moment, we don't see one. So let's see how this works out. Unfortunately, there are no UFOs between the different timeframes that we've just filtered through. So despite the fact that this looks good, there's no opportunity here. Now, for those of you that don't mind taking a bigger risk, you could place this trade as is on the daily. The benefit of the smaller time frame, the only reason we use the smaller time frame, is to allow us to get into a bigger move using a smaller risk. That's the point of it. With pretty much any trading methodology, the only reason you use different time frames there is to correlate probabilities across more than one time frame, and the smaller time frame is nearly always used for entry purposes and exit purposes, as opposed to decision purposes. Not always, but in a lot of cases. So the reason for the smaller time frame is to get in at a smaller risk and correlate things, right? To say there's also buyers on another time frame. Now, considering we have buyers in the context of buyers with our EMA, in the context of buyers with our autoclimate, it just so happens that normally we look for buyers on the right hand side, but we've actually got them on the left hand side. If you're comfortable taking a bigger risk, you could take this trade. I won't, because it doesn't fit our strict methodology. But if you were comfortable with the bigger risk, then you would have your entry at 131.41, that would be. Your stop loss would be at 129.99. You'd have a target here. It's going to be a one-ish to one trade. Probably your target one would go just underneath it. So if you're comfortable taking a wider risk and a lower profit, there is an opportunity there available for you. If you're not, then move on. Okay, last thing we'll look at before we round off today then is the pound New Zealand. So let's check that out. Pound New Zealand, supposedly a long opportunity, but let's have a look. Okay, so thick blue dot, probability up. EMA is 2.0385, which is just underneath current price. It's going to filter through timeframes, see if we find a UFO on the right hand side that coincides with the EMA. Nothing there. It's close, but not close enough. Nothing on the 1 hour and nothing on the 55. Now I've looked through 4 different timeframes on the right hand side within a tighter range. Now, I know I've said that the point of the right-hand side is that you place trades that give you tighter risk in the context of what the bigger time frame is telling you to do anyway, which is buy at the EMA in the context of an upwards climate. We want to confirm our entry and stop loss by getting in with buyers on the right-hand side. Now, I've looked at different time frames within a range. Why within a range? Because if you're making a decision based off of a daily chart, and you use a 1 minute chart or a 2 minute chart to define your entry and stop, they're too far away from each other. They're too different. They're too, or they're not closely correlated enough for that to make sense. You'd also have an extremely tight risk, which is more likely to stop you out, especially in Forex where we have things like spread. If you used a daily chart and a 55, a 60, they're obviously very close together, a 2 hour, a 4 hour. You could, if you want to, look at 3 hours, you know, I don't know, make up different timeframes in between that. 144-minute is the one that we use sometimes. So you could look at more than the timeframes that I've looked at, but do it within a range. You don't want to go too low down compared to your left-hand side. Okay, so we've only got a few minutes left, so I won't try and look for new opportunities because we've run out of daily climate ones anyway. If you have this TradeStation scans, you'll notice that you have perhaps a euro-yen opportunity on a 240-minute climate. Otherwise, there's actually nothing else here in terms of opportunities to look at. So if you did want to go to smaller time frames, you can check the euro-yen on a 240-minute time frame on the left, which means you might use a 20-minute, 30-minute, 15-minute type time frame on the right. So that brings us to the end today. Hi, Ray. Oh, I've just seen Ray Huss. Thanks for saying hi, Ray. Nice to see you here. Yes, so we've placed, I think, 4 or 5 trades today, so hopefully that's been helpful. Explain why we've done them. I know you guys have not necessarily been too chatty in the chat box, so if you do have questions that you want to clarify, you might find that by going to this link, tradewithufos.com/Becky, by scrolling down, you might find that other people have asked the question that you're thinking of, and the answer's already there. If not, you can log in for free and post the question here, which enables me to answer it there. Everybody learns from the same place. Or you can email me at becky@tradictive.com. I'm always happy to help if you have any confusions over anything that we go over. So thanks for joining me, guys. Have a great rest of your trading day. Have a great rest of your trading week. And I will see you, I believe, in a couple of weeks' time. Take care.